Good morning, students. So in the last class we started and learned about some of the types of journal entries, that is simple journal entry and compound journal entries, and that is accounting entries relating to the GST, and there is two types of GST, that is interstate and intra-state. Okay. So intrastate, it covers the CGST and SGST, and it is within the state, and interstate GST is called as IGST, that is um, outside between two states. Okay. So there is some of the accounting entries related to GST, and that is under the intrastate supplies and interstate supplies, and we learn some of the problems relating to this GST. And today we are going to see, and I hope that you finish the problems. Okay, so do the problems in your class or note. Write the journal entries relating to the GST and do the problem 6, 7, 8 and 8th sum. And see, the next one is the opening entry. So opening entry means we have to write the journal entries that is relating to the opening entry. Okay, so for every business they are opening new books of accounts on the starting day of the every year. So they will the accounts which is having the balances in the previous, that is for example 31st December the accounts will be closed, and in the January 1st they will open the new accounts. If there is balance in the last year date, they will forward that balances to the next year. If there is balances in the assets and liabilities of the previous year, will be forwarded in the new books of accounts in the beginning of the next year. So for this, the journal entry is to be made, and this entry is called as the opening entry. Okay, so in this entry we already studied the assets or the debit balance and liabilities are credited. So in this journal entry, all the assets are debited and all the liabilities are credited. So there is a differences in the debit amount and the credit amount, and the differences is to be recorded. It is balanced by the name of capital. We already studied. There is accounting equation, no? So we are following that rules only. That is debit all assets, credit all liabilities and capital. This is the rule for the opening entry. Okay, so see the problem 9. So give the opening entry. The 1st April 2018, the following balance appeared in the books of Mr. Abhinav Khanna. So the assets, they are given the assets balances. The assets are cash balance, bank balance, bills receivable, debtors, stock, investment, machinery and building are the assets. Liabilities are creditors, loan and bills payable. So what is the journal entry? We have to debit all the assets. Put the name of the concern, journal entry, put the columns, date, particulars, LF, debtor, amount, creditor, amount, and put the date, April 1, 2018, and debit all the assets, cash account, debtor, bank account, bills receivable, debtor, stock, investment, machinery, building, and write the amount in the debit column. And we have to credit the liabilities. Creditors are liabilities are to creditors, to loan, to bills payable. So there is a 3 amount. And next one is we have to find the differences between the assets and liabilities. Okay, so add all the assets and add all the liabilities. Okay, and find out the balances. The balance is called as a capital account, and capital account is also the liabilities, and it is a credit balance. So capital account is to be credited. Understood? 3,81,000 is the balance amount, so it is called as a capital account, and capital account is a credit balance, so it is to be credited. Understood? So see the next one, accounting treatment for various transactions. So we are going to see some of the accounting treatment. So for each treatment it includes a journal entries. Okay, so the first one is stock account. So there may be some of the, at the end of the year there is some of unsold stock which is at the end of year, and it will carry forward to the next year. It is called as a stock. Okay, so it is called as a closing stock. Okay, so at the end of the year it is called as a closing stock. When it is forward to the beginning of the next year, it is termed as the opening stock. Okay, so at the end of the year, closing stock is recorded by making the closing entry. Here the closing stock is debited and trading account is credited, and we will see in the next chapters we will see deeply. Just closing stock is to be debited, okay, because it is one of the asset of the company. Understood? So closing stock is one of the point, is an asset, and it is also shown in the balance sheet. Okay, so the financial statement, we will prepare the balance sheet, trading account, and in trading account in the credit side the closing stock will be appear, and in the balance sheet also the closing stock will be appear under the heading assets. So we will study deeply in the next chapters. Okay, so see the next accounting treatment, see the next transaction, loss by fire or theft. If the goods are damaged due to the fire or theft due to some of the reasons, it is one of the loss. So as per the rules, loss is to be debited. Okay, so the journal entry will be loss by theft or loss by fire account debtor to purchase account, because the goods are damaged. So instead of writing the goods is indicated by the word purchase account. We already know that, no? So if the goods are purchased, we are debiting the purchase account. So if the goods are purchased for cash, for whatever the transactions, we will debit the purchase account, no? Like that. If the goods are damaged, so it is a loss. So loss is a debit balance, debit all the expenses and loss as per the rule. So we are debiting the loss by fire or loss by theft, and we are crediting the purchase account. Understood? Being the goods lost by theft or goods destroyed by fire, this is a narration below the journal entry. When the goods are fully insured, when the insurance is claimed, okay, so already the company will make the insurance for the goods. So if there is a damage, they will claim the amount in the insurance company. So the insurance company will pay the amount to the company, no? So in this, when there is any insurance claimed and the amount is received, so what is the journal entry? Insurance company account debtor to loss by theft or loss by fire, because now we are receiving the amount which is lost, which is lost due to the loss by which is lost due to the theft or fire, no? So the amount which is lost due to the theft or fire, now we are receiving that amount by claiming in the insurance company, and we are receiving. So we are crediting the account. Understood? So being the insurance claimed is a narration below the journal entry. When the full amount of claim is received from the insurance company, first entry is when at the time of claiming at the time of claiming the amount to the insurance company, the entry is insurance company account to loss due to fire or theft. Second entry is when the amount of claim is received. So debit what comes in by means of cash or bank. Okay, so if it is by means of check, we will debit the bank account. If it is means of cash, means we are debiting the cash account. So we are debit what comes in, debit cash account debtor or bank account debtor to, we are crediting the insurance. Who is the credit? The giver. Insurance company is the personal account, so credit the giver, we are crediting the insurance company account. Understood? When the insurance company does not admit the full claim, so first entry is a full amount is received. The second entry is when the insurance company does not pay the full claim of amount. So in this case, so for example, 50,000, 5 lakhs means if you are receiving 3 lakhs and the 2 lakhs, 5 lakhs amount of goods are damaged and we are claimed that amount to the insurance company, but the insurance company paid only the 3 lakhs. So balance 2 lakh is the loss. So instead of the loss is to be debited under the heading profit and loss account. Okay. If it is a loss, we are debiting the profit and loss account. If it is a credit, that is, if it is a profit, means we will credit the profit and loss account. Understood? So bank account debtor, that is amount received, and profit and loss account is claim not admitted, the balance amount to insurance company account. Okay, so the balance amount is not admitted is not admitted, so it is one of the expenses or loss to the company because the amount is not received from the insurance company. So we are debiting the amount under the heading profit and loss account. Understood? So the next one is goods given away as a charity or distributed as a sample. Okay, so see that the goods are given away as a charity or distributed sample, it is one of the loss to the business. Okay, understood? Charity means it is donated, so it is one of the loss to the business. So as per the rule, if there is any loss, we have to debit the loss as per the expenses. It is one of the expenses, no? So goods distributed as a free sample account or advertising expenses account, as the case may be, the goods is to be credited to the purchase account. We already know that, no, if the name of the goods is indicated, means it is called as a purchase account. So if it is in expenses, so we have to debit the expenses. It may be the name of free sample or advertising expenses to purchase account. Understood? When the goods are used to make an asset, okay, when the goods are used to make an asset, the asset amount will be increased. So the asset is a debit balance, so we have to debit the asset and we have to credit the purchase account because the goods are used. So instead of goods, we are using the word purchase account. Understood? So asset account is to be debited and we have to credit the purchase account. Okay, so see the problem 10. This transactions are related to the goods account. Okay, so it's very easy sum. First one is Varun started business with cash and furniture. So and building. So in the means of what is the debit cash account, furniture account, building accounts to be debited, and we have to credit the capital account, total amount. Okay. Second one is cash purchase. So purchase account to cash account. Goods bought from Rohit. So name is indicated. So instead of crediting the cash account, we have to credit the Rohit account. Cash sales. So cash account to sales account. Goods sold to Gupta trader. So name is indicated. So instead of debiting the cash account, we have to debit the Gupta traders account. Next, goods returned to Rohit. Goods returned to Rohit. So it is called as already we purchased from Rohit, but now we are returning. So it is called as a purchase return. Purchase the debit balance, purchase return is a credit balance. So we have to debit the Rohit and credit the purchase return account. Next, goods given away as a charity. So it is one of the expenses. We have to debit the charity account and we have to credit the purchase account. Goods returned by Gupta traders. It is called as a, so in the beginning there is a sales to the Gupta traders. Now it is a sales return. Sales is a credit balance, sales return is a debit balance. So we have to debit the sales return and we have to credit the Gupta traders. Next, goods lost by fire, insurance company admitted and paid the claim for 60% amount. Okay. So see that January 17, what is the first entry? First entry is being goods lost by, there is a 3 entries, no? For the first entry is being the goods lost by fire. Check with the entry. Okay, the first entry is goods lost by fire. What will be the entry? Loss by fire account to purchase account. Because it is a loss, we are debiting the amount of loss because as per the nominal account rules. Next entry is claiming the amount into the insurance company. So what will be the journal entry? Insurance company account data to loss by fire account, the same 15,000. What is the third entry? The amount which is received from the insurance company. So in 15,000 they paid only 60%. So 15,000 into 60 by 100. That amount is received. So we are debiting the 9,000 and the balance 40,000 is not received from the insurance company. So it is considered as the loss. So we are debiting the loss of rupees 6,000 to the profit and loss account. Okay, and we are crediting the insurance company. Okay, very easy. Goods given away as a sample. So a sample is also one of the expenses. So we are debiting the goods So sample account is to be debited and purchase account to be credited. Goods were used to make an asset. Okay, goods which are used to make an asset. So asset account is a value of asset is increased, so we are debiting the asset account and we are crediting the purchase account. Okay, it's a very simple sum. So see the next one, fifth type of that is accounting treatment for discount. Next we are going to see what is accounting treatment for discount. So there is two type of discount. First one is a trade discount and the cash discount. Trade discount is not recorded while recording the business transactions because it is available to all the buyers whether buying on cash or on credit. So it is a reduction from the sales value. So trade discount is the amount which is to be deducted from the sale value and the sale is recorded at the net price. Understood? So the trade discount is the amount which is deducted from the value of the sale and the balance net price is to be recorded in the books of accounts. Okay, so is to be deducted from the cash memo or bill of the goods and thus the amount so arrived is recorded in the books of accounts. After deducting the trade discount, the balance amount is recorded in the bill. Okay, so if the such goods are returned, then it is again deducted from the list price of the goods returned. So normally we already seen when we are purchasing the goods or some of the sarees or chudidar from the shop, there they will make the discount and they will record the balance amount in the bill. Okay, so what is the cash discount? So this discount is allowed only to those customers who make the cash purchase. This is the one important one. Okay, and or to pay the amount of purchase within the fixed period of time. So this type of cash discount is allowed to the customers only for the cash purchase. Okay, but trade discount is both for the cash and also in the credit purchase. So when we receive the discount, we make the payment and we allow the discount when we receive the payment. So okay, so entry for the cash discount is recorded along with the entry of the payment is recorded in the books of accounts. So discount allowance, which is called as a nominal account because it is one of the expenses. So there is a two types. Okay, discount received is the income and discount allowed is the discount received account is one of the gain for the business, so it is to be credited to the discount account or discount received account. Understood? Discount received is a nominal account and it is one of the gain. So as per the rule, we have to credit all the income. So discount received account is to be credited. A discount allowed account is one of the loss to the business. So as per the it is coming under the nominal account. It is coming under the nominal account. So as per the rule, we have to debit the expenses. So discount allowed account is to be debited. Okay. So there is some of the differences between the trade discount and cash discount. This is very important question. Okay. So you should be thorough in the what is PPA trade discount, what is PPA cash discount, and what is the differences between. And in the cash discount, there is two types of discount: discount received account and discount allowed account. And the discount received is a gain or income and discount allowed is a expenses or loss. And we have to know the accounting treatment. Okay, so see the 11th sum, it is a journalize the transaction related to discount account. It is all the transactions related to the discount. Okay, so see the first one, purchased goods for cash worth rupees 1000 at 10% trade discount. Okay, so in this we have to make the to record the books of accounts after deducting the trade discount of 10%. So 10,000 to 10 by 100, 100. So we have to deduct the trade discount rupees 100 from 1000. So balance is 900. Understood? So purchase account to cash account, we have to record only the 900. Okay, next, sold goods to Bharat. So it is a credit transaction because the name is indicated, so it is a credit transaction, credit sales. So 500 at 5% trade discount. So 500 into 5 by 100, 25. We have to deduct the 25 of trade discount from 500. 500 minus 25, 475. So it's the amount, balance amount is to be recorded. So journal entry will not be changed. So what is the trade journal entry? Bharat account data to sales account 475. Okay, goods worth 100 were returned by Bharat. So it is a first there is a sales. Now it is a sales return, just opposite to the sales. So sales return account to debited and Bharat to be credited. Understood? So in this also we have to make the trade discount of 5%. So 100 into 5 by 100, 5 rupees. The same 5% trade discount is to be used at the time of return also. Keep in mind. Okay, so you have to see the, we should not forget to do the 5% trade discount at the time of sales return. So the same 5% trade discount is to be deducted at the time of sales return also. So in 100 we have to apply 5% trade discount. So rupees 5 and we have to subtract 5 rupees, the balance is 95. Next is cash received from Bharat, rupees 375 in full settlement of his account. See that 375. So actually that 375 in full settlement. Okay, so in 375 Bharat is 5% trade discount. Okay, so discount allowed is, how to calculate the discount allowed? 5 rupees is the, in 500, okay, 500 they are applying the 5% trade discount. The same procedure is followed. Okay, so goods cash received from the Bharat 375 in full settlement of his account. What is the meaning? So 375 is received. Okay, so 375 and discount allowed is the same 5 rupees. So at the time of sale to the Bharat, 5% is a trade discount. Okay, so the say 5% means what is the amount? 500 into 5 by 100. What is the amount? 25. Okay. So in this, so the balance is 95. So in that amount, so what is the balance amount? 500, and in this value of 500, 475 is the net value. In this 475, he returned 100 worth of goods is returned by Bharat. No? So after deducting the trade discount, what is the amount? 95. Okay. So first we have to subtract, because he is not liable to pay the amount of 95 because he returned the 95 value of goods. After subtracting the trade discount, what will be the value of goods? 95. So subtract that. After subtracting 475 minus 95, what is the amount? 380. Okay. So in this 380, we received from Bharat 375. Understood or not? The second entry is credit sales. Okay. So 500 into 5 by 100, 25. We are subtracting the 25 and writing the balance amount. Third entry is sales return. So in the sales return also we are applying the 5% trade discount. So in that 500 value of goods, he returned 100 value of goods. So he is not liable to pay rupees 100 because he returned the goods. Understood? Okay. So after subtracting the trade discount, what is the amount? 95. So he is not liable to pay rupees 95 because he returned the goods. So he is not liable to pay the amount of 95. So in 475 we are subtracting 95. The balance is 380. So now he is liable to pay only 380, but in 380 we received only 375 from Bharat. Okay, so balance 5 rupees is a discount. So it is a discount which is allowed to Bharat. It is expenses to the concern. So it is called as a discount allowed. Okay. So instead of we have to receive 380, from 380 we are receiving only 375. He paid only 375. So the balance 5 rupees is a discount. So it is expenses. So we are debiting the discount allowed by rupees 5. Understood? And we are crediting the Bharat account. Next, goods purchased from Aman, 250. So the same one. It is the name is needed. It is a credit purchase. So purchase account order to Aman account. Cash paid to Aman rupees 240 and discount received rupees 100. Okay. So as per cash paid means credit what goes out cash account 240. Discount received is an income. So as per the rule we have to credit all the income. So discount received account to be credited 10 rupees. So Aman account to be debited at 250. Understood? See the next one. Purchase goods for cash worth 250 at 10% trade discount. At 10% trade discount. Okay. So it is the cash purchases. Okay. So it is not a credit purchase, cash purchase. First write the entry, purchase equal to cash account. So 250 into 10 by 100 rupees 25. So 250 minus 25, 225. Okay. So purchase account at 225 to cash account 225. Understood? Okay. So do the problems and write the journal entries relating to the accounting treatment for the various transactions, that is stock account. From the opening entry you have to write all the journal entries and do the problem 10 and write the accounting treatment for the trade discount and cash discount and differences between the trade discount and cash discount, and do the problem 11 and try to do the problem 12 and 13 and 14. The same that is a transaction which is related to the cash and trade discount. This very simple sum. Try to do the sum because it includes the working notes, how to calculate, all that information is available in the sum. Just read the problem, understand the problem, apply the rule, okay, and do the working notes and then write the journal entry. This very simple problem. Try to finish 12, 13 and 14. 12, 13 and 14 sums are relating to the trade discount and cash discount. Okay. So the next class we will see the next accounting treatment for some of the important items, that is capital account, capital introduced, interest on capital, drawings, insurance premium paid, income tax, interest on drawings, obtaining the loan, interest on loan. Okay. So there is some of the important items we have to know the journal accounting treatment, how to record that how to record the transactions. We have to see, we will see in the next class. Okay. So do these problems up to the problems relating to the cash and trade discount in your class of note. Understood? Thank you, students.